Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. We got a lot to talk about today. In today's video, we're going to talk about whether or not we expect to see major support hold support, the same support that we're looking for in the S&P 500. We're going to do basic technical analysis today and read the order flow. Was actually broken by the NASDAQ a couple of days ago, and now we're looking to see whether or not does the S&P 500 hold that level and give us some signs of life to be buying some stocks. We're also going to take a look at Bitcoin. We're going to take a look at the big news yesterday out of Peloton, the big news out of Netflix, and we're going to jump into Bitcoin. We have had pretty significant levels that we've been watching in Bitcoin and very obvious levels that could have been support. And what is the next level and how does that translate into some ideas? Plus, in this video, we're actually going to break down some stocks showing relative strength so that if the market does find a bottom today, we would need to have a list of stocks prior to the market opening so that we actually understand. We need to be ready before it happens. If you're a regular viewer of our channel, you know that every single thing we do is all about scripting out your success. So you have, if this happens, then I plan to do this. If this happens, then I plan to do this. That's the highest levels of trading. However, we're going to start out a question from somebody who's a brand new trader. Her name is Roz in our community. I don't know if Roz is on the call with us right now, but I want to bring something up because it's very, very important. I'm actually going to do that in just 1 second. So stick around. We'll be right back. Okay, so thanks so much for being here with me, everybody. Obviously, everything we discuss here is for educational purposes. It's up to you to make that final decision. I'm going to help you right now with one of the big decisions, and I'm actually going to pull this up on the screen. It's a really good question, and I believe that it's perfect for the current market volatility, for the current way that the market is actually unfolding in a less than obvious manner, for lack of a better way of putting it. And again, if you're a regular viewer of our channel, you know that probably for the better part of a couple of months, I've been discussing the tape has changed. You need to respect risk. Get out of your head that garbage about I don't need to trade with a stop loss. You need to make that distinction, whether you're investing or trading or day trading, which, by the way, this is day trading paradise right now. Let's get that out there for sure. If you're day trading stocks right now, you are in heaven. We're getting volatility on both sides of the market. We had two amazing moves yesterday, one in the morning to the upside, one in the afternoon to the downside. The market internals, if you watch that market internal video that we put out there 2 days ago, you can find it right on the homepage of the website. It's called the best indicator for day trading. That one indicator is what we're going to be watching all day, every day. But what I want to do, I just want to address. I want to ask you to look in the mirror right now and ask yourself before you start to buy stocks. And Roz is actually on the call right now, so this is great. We had a big discussion in our coaching call yesterday about the types of stocks to choose depending on where you are in your trading journey and your experience. And look, I'm probably at the top of the list to tell you, go for it. Dream big. Why not you? Like all that kind of stuff. However, in trading, there is a learning curve where you need to get to a point where you have to acknowledge where you are so that you, number one, give yourself a chance to actually learn how to trade without blowing your account up. And I know that sounds really tough, right? That's kind of like tough love, but it's reality. You need to choose the right ideas that match your current resources, your experience, your skill level, your decision-making ability. And your number one goal, especially early in trading, is to understand how to find good ideas and then how to interact with those stocks that you buy so that you gain confidence that you know what you're doing. Then you simply scale to either more volatility or more share size. There's two different ways to scale your business. Again, like I just said, you could choose to trade more positions. You could choose to trade bigger share size. Or if you start to really move up the ranks, you can start to trade more volatility. But the problem that a lot of traders have, and look, I did this when I first started trading too. So I want to be very clear about this, is you can't wait to trade. You can't wait to get in there and you can't wait to make money right away. But that, it's kind of like going too fast before you understand how to navigate the road. So we did a PDF a while back, which was a transcription from a video that I did. And I just want to point this out to you. It's a really good question from Roz today. Would make a great stocks for breakfast, addressing the mindset and position sizing and going from A to Z on profitability, on what that means to brand new traders. just like in the PDF, like the comment about don't trade any over 300 shares, and that felt like a relief. So why is that so significant? And why am I bringing it up, right? It's because of all the volatility we're experiencing right now. There's so many emails and comments and feedback that I got from everybody about bottom fishing today, which, by the way, we want to make a distinction. I had a conversation with somebody yesterday as well about bottom fishing versus buying stocks that are strong. Bottom fishing implies the stock is getting hammered. Let's say Netflix right now or Peloton yesterday. Buying strong stocks, even if the market's going down, is not bottom fishing, which is actually what we're going to do today. We have a big list of stocks that I want to go over with you today for potentially buying those stocks today because they have relative strength to the market over the last month, the last week, and it's still above the 50-period moving average. So we got a big list of those stocks today as well. The point that I want to get across before we jump right into the S&P 500 in those stories is if you are taking your trading seriously, which I have no doubt in my mind you are, because look, it's 7:36 in the morning. You're here. You want to learn. Please, and I'm saying this as your friend, not some dude on YouTube. I'm saying this as your friend. Make sure that your share size and the amount you risk per trade matches where you are right now. And do not be embarrassed. And I know embarrassed is a strong word. Maybe I could spin that the other way. Be smart about your share size and trade 100 shares, trade 200 shares, and don't scale up until you prove to yourself, not me, till you prove to yourself that you can be consistent over different market conditions and at least a couple of months. That's the smart way to learn trading, because you're also not going to be scared in trades as soon as you put it on because it's moving against you, or too excited because it's moving in your favor. Your number one job is to understand what great ideas look like. So we talk about it all the time. You need to understand what perfect looks like, and then everything away from perfect will tell you that there's conflict. Conflict is the word that we use for adjusting position size up and down. So if I could give you any, I'm not going to use the advice word because I'm not anybody's fiduciary responsibility here, but if I could give you a suggestion as a friend, especially in the context of the volatility we have right now, if you are struggling to get a read on the market right now, if you are losing more than you obviously would like to, maybe even a lot more than you'd like to, the smart trade right now is scaling back and understanding how to handle the expansion in volatility. The VIX, the volatility index, has dramatically expanded. And we're actually going to go over and head to the charts right now and take a look at those things. So what I'm going to do is I'm actually going to kind of go on the bottom over here. We're going to actually start out with the VIX reading. And this is what the VIX did yesterday. This is a staggering move in volatility yesterday. And just to give you an idea how big this move was in the VIX, even if we just go from here to yesterday afternoon, that's a 21% move just in the afternoon yesterday. Okay, just in the, and actually this is into today as well. Yesterday afternoon was a little bit earlier in the day, ended like kind of like right around here. So that's actually where we are right now. Let's actually do 4 o'clock yesterday, which is kind of like right around there. So almost 12%. So in case you don't know what the VIX is, it's one of the primary indicators that we watch in the market. And the VIX is the volatility index. This is the S&P 500 volatility index. It's one of the primary indicators that we use both as day traders and swing traders. And again, the other indicator is the tick reading. Watch that video that I just did recently. You'll see me pointing on the screen that says best day trading indicator. You want to watch that. It's a 13-minute video. Maybe I'll post it here when the video is done. I'll post a link for it here, or I'll definitely put it at the end of this video. When you understand how to manage your position size with volatility, that means that you are adjusting your share size up or down based on the distance between the stop and the entry. So as the VIX goes higher, which is what you can see over here, as the VIX goes higher, that means that the volatility is expanding and the distance between a normal entry and a normal stop loss is going to increase. So what that means is if you're acting like a smart trader, which I know you are, that means that if you're risking the same dollar amount, so let's just say for argument's sake, you risk $300 per trade, just as an example. If a normal stop loss is $1, that means you can have the right amount of shares. You can have 300 shares for $1, right? If you're risking 300. If the VIX goes up, like you're seeing here, the normal stop might be $2 now. So if you still want to risk that same $300 for $2, that means now it's 150 share size. So a lesson that we're giving you right now, when we hop on over now and look at the S&P futures and the S&P 500, is as the volatility expands and you're risking the same dollar amount, what's going to change is the share size. That's higher level stuff. And that stuff you really want to learn because, again, I'll use Roz as an example. We had the conversation yesterday about handling the volatility and which types of stocks to trade. And not necessarily Roz, but we've had a lot of conversations about, in the coaching calls this week, especially with the volatility picking up, is being afraid when a stock moves against you. Now, I just want to say this, like nobody likes to lose money. So let's be clear about that. I'm not saying that in a way where it's okay to lose money. However, when you accept a dollar amount before the trade. So what I mean by this and what we teach in the program is we say, okay, prior to the trade, generally speaking, you can have a certain allocation to your ideas. And let's say you're going to risk 1% to a okay idea where maybe it's just trading well this week, but not maybe on a bigger time frame, or A plus idea where maybe you'll risk 2%. So let's just use 2% as an example. If you risk 2% of $30,000, that's $600. So you're going to risk $600 on that trade. So you're comfortable risking that. So that means that if it goes up and down, up and down, up and down, or especially down, if you are comfortable with only risking 2%, you already accepted the risk. But with the kind of volatility that we have right now, you need to really be honest with yourself. What is the right risk to be taking right now for you? If I was teaching my nephew right now as an active trader and he was just learning how to trade, or he was, and again, I want to get this across as well. I don't care if you're trading for 3 years. If you're not profitable yet, you're still a beginner trader. Let's be clear on that. Don't tell me, well, I've been trading 3 years, I don't have anything else to learn. If you're not profitable yet, there's something missing. I don't care if it's 3 years, 5 years, or 10 years. There's something missing that that you need to learn, that needs to change to take it from where you are to where you want to be. Most of the time, and raise your hand, you probably have experienced this. Most of the time, it's because you're getting shaken out of good ideas. Or number two, which was shaken out of good ideas means that you're focusing too much on the dollar amount, or you're just quick to book the profits, or you did not accept the risk prior to the trade. And when it moved against you, you moved your stop loss a little. You moved it a little bit more. You moved it a little bit more instead of just getting out because you accepted the risk prior to the trade. Now, obviously, the reason that I'm bringing this up is because volatility has expanded dramatically. And again, this is only the 5-minute chart. If we take a look on the daily chart and give you a much bigger idea of what's going on here, this is where we are over the last 5 days. So if we bring this back into the picture and work our way through the volatility, let me actually bring that there and even just go over the last week. This is a 55% increase in volatility. 55%. Just to give you an idea there, right? 55 and a half, and that's only over 6 trading days. Only over 6 trading days. So what I'm telling you right now is even if you don't understand all the intricacies of what's going on in the VIX, it should affect your position sizing. The dollar amount doesn't change, but the position sizing will change as the VIX expands. And what's kind of cool about this is, especially if you're on the day trading side of things, let's say even 2 weeks ago, if you were looking at a chart of the S&P 500, we'll take a look at that now. And let's say we look at it, again, just for the sake of this conversation, you can see here that on the side, this 5-minute chart over here, you can see that they're dollar increments. And this is not expanded out. These are $1 increments. I will tell you, and this is just a fact, those same 5-minute candles, even a couple of weeks ago, were 25-cent increments. That's a huge difference in how fast they're moving and what you can expect for your stop loss. But the key I want to get across here to everybody is it doesn't matter if it's a volatile $20 stock or if it's Amazon at, what is it, Amazon, 3,000 something right now, right? It doesn't matter which of those stocks you're trading because you're risking the same 300. I'm using 300 as an example. You're risking the same 300. What's changing is you're acknowledging the spike in the volatility. You're risking 300, but you're adjusting your position size on your initial entry to compensate for the increase in volatility. So getting back to what Roz brought up this morning about teaching people and bringing it to the forefront, I'm telling you as your friend, okay? As volatility expands, you need to be much smarter. Maybe you're smart now. I'm just speaking in general terms. You need to be smart with the way that you're allocating buying power and position sizing on your initial entry. It's critical to long-term success. And I will tell you straight up, even if we weren't talking about the volatility of the market right now, we're going to pull up the daily chart and the 200 period moving average, which is the big level we're watching right now. Even if we weren't talking about this massive spike in volatility, it's still the smart way to learn how to trade, because when you have the right risk for your current risk tolerance and the right share size, that allows you first to learn how to be a trader. Then you work your way into scaling what you just proved you can do. It's by far the cleanest, surest, most reliable path to understanding what it takes to be a professional trader, which is first, I know this sounds so silly, but learning how to trade first, finding an edge, proving you can follow it, and then scaling it if those two are in place. So if I could give you any suggestion right now, especially because the picture of the market has changed dramatically, is make sure that you're trading the right risk, because there's going to be amazing opportunity in the market that we are in right now. Probably a little bit better on the day trading side of things, where we could be trading long and short at the same time. And that volatility is just incredible, especially when you understand how to use leverage and those kind of things. The swing trading side of things, the little bit longer term perspective type of things, we have to work these positions a little bit more, be a little bit more patient on those ideas. But just as on top of that as well, I'm going to give everybody a link right now. We have a video. I'll post this below the video as well after this. It's a video on hedging that we did, I think last July, if I'm not mistaken. So I'm going to post this at the end of the video if you happen to be watching this on a replay as well. So that video that we just posted in there is essentially how to hedge a portfolio and protect gains, which is obviously something a lot of people are thinking about right now. So if we get into the market right now and we work our way into some of these positions, what we're actually looking for right now, and actually let's go over to the Qs, because that's really the bigger one. You can see the Qs actually tested it 2 days ago. Yesterday sliced right through it, and it's actually below it again. If you don't know what the 200 period moving average is, generally speaking, most people have 3 different trends, and those different trends are where Dow theory kind of emulates. Dow theory essentially was 100 years ago, and moving averages should emulate Dow theory, which is always 3 trends in place: the short-term trend, the intermediate-term trend, and the long-term bull or bear market. The 20 period moving average, and actually let me pull this up on the screen. We'll pull the 20 period moving average, the 50, and the 200. The 20 is the most active momentum type trading. So generally speaking, when stocks are above the 20 period moving average, you're momentum trading. You hear us talk every day about well bid. We're looking for that next move. The 50 period moving average is a little bit wider. It's kind of like that last line in the sand to establish a bullish environment. It's called the intermediate trend. Got to be a little bit more patient for those ideas to play out. And the longer term bullish or bearish market, many people use the 200 period moving average. I use simple moving averages. There's a whole bunch of other different ways you can do that. But right now you can see here on the chart, the Qs actually broke through that after five days of heavy selling. We had a bullish U-turn and then 5 days of heavy selling. So now the SPY looks like it's going to open up right there, right around the what's the exact level? Let me give you the exact number. 441.68. So it's still a little bit below that. So I want to give you the advanced game plan for today that I'm looking at and what I'm going to be walking through on the active trading side, especially, and then we can work our way over into some trading ideas for today. I am actually looking for a lower opening today. And I know that kind of sounds weird, but if you are a member of our community, or whether here or in the boot camp, you've heard me talk about saturation plays. And the saturation plays are really where stocks have buying pressure, and then a sell day, a sell short day, and that whole sequence plays itself out all over again. Now, what generally happens is when stocks exhaust themselves, or we call them saturate, you can imagine stocks going down. And what we're looking for is that one final push down where sellers have exhausted, buyers recognize value, and value in the context of a trading opportunity. We're not talking about stock valuations, and buyers step in. So I'm going to give you the clues for what I'm looking for as both day trades and potentially working swing trades today. So when we look at this, we're typically looking at, I just want to hide these because we're going to pull up, and I taught all this in a video that I did recently, but I'm going to give it to you again this morning. What we're going to be looking for today is specifically using this. And I used this as an example last night. So here's what I want you to visualize today. And this is critical, and super advanced, quite honestly. What we're looking for to happen in the market today to really be on top of stuff before it becomes obvious. And that's a pretty wild statement, right? We're looking for the market to push down today, rally a little bit, and then push down and make a new low again. So we're looking for all of this to happen in the first 45 minutes of the day, maybe the first half hour. So if this is new to you, this is what I teach in the boot camp. If you want to learn about the boot camp, click the link below the video. You can at least go and see what it's all about. Scripting this out. Now I'm telling you what I'm looking for before the day unfolds. We're looking for the market to push down, have a slight rally, make new lows. But at the same time, when the market makes that low for the second time, I am looking for the New York Stock Exchange tick readings. Now, there's New York Stock Exchange tick, NASDAQ tick, SPY tick, whichever one you're comfortable using. I use New York because there's more stocks. As the market pushes down to that second low, I am looking for the tick readings to make a higher low, which implies less selling in the big picture compared to what's going on in that individual sector ETF. Then I am looking, now again, if the market is pushing down, that means that the volatility in the VIX is going up. So if the VIX is going up while the market's going down, what I'm looking for in the VIX is I'm looking for the VIX to go higher while the market's going down. Then when the ticks make that higher low, I'm looking for the VIX to make a lower high. Is this advanced stuff? You bet your ass it is. But I want to teach you what's possible because a lot of people don't even know it's available. They don't even know the right questions to ask. So I want to give you a thought process at the higher level so I can challenge you to think bigger. I can challenge you to think in a different way. And I'll tell you straight up, a lot of people come into our community and they're like, calling the market open, it's so confusing. There's so much going on. No, it's not. It's not confusing. You need to know what to look for. You need to know it to script so that when the market opens and all this stuff is unfolding, this is what we're doing. Like, okay, there's step number one. Am I exaggerating? No, I'm not exaggerating. I walk everybody in our community through this step by step as it's unfolding. You can ask anybody here who's on the call right now because there's a lot of people on this call right now in our community. So what I want to challenge you to do is start to think bigger. Make sure you manage your share size appropriately for where you are right now. And watch that part of the video that I just did, because that is the way professional traders, that's what I'm teaching everybody in our community, professional traders think. That's only one tiny part of what we do during the day because there's a whole sector rotation and a whole bunch of other things going on. But I want to give you a visual of what we're looking for. So I'm going to walk you right into that. If we can expect the first push down, a slight rally, and then new lows. When those new lows happen, this is what we're looking for. So I'm going to bring you over here. So New York Stock Exchange tick chart, this is what we're looking for. So if you can visualize at this point where the SPY went down, right? Then the SPY rallied, and then the SPY pushed down to new lows. This is what we're game planning right here. But at the same time that this pushed down to new lows, right there, we saw higher lows in the market internals. That's real trading, everybody. If you're on our channel here every day, and by the way, if I'm providing some value for you, can you please do me a favor, smash that like button because it'll let me know that these are the kind of videos that you like. This is the kind of information. And if you're new to the channel, please hit that subscribe button so you get updates. We have new videos coming out this weekend on short selling. So does everybody understand that? If you could just do me a favor, just type yes in there because this is the stuff that you're not going to find necessarily in a book. This is the stuff that you have to be in the market, get knocked around a few times and really understand what absolutely works, what absolutely does not work, and how do you put those pieces together. Now, let's look at the other side of that today. We know that we're looking for the SPY to push down. We know that we're looking for that second movement, right? What if that does not happen? What if the market pushes down, the VIX continue to push down to negative 1,000? I'm actually going to show you yesterday afternoon, this is exactly what happened yesterday. You see this here? We have these big negative tick readings, negative 1,000, 1,400, 1,600, all those big pushes to the downside. Here's where traders get in trouble, okay? This is like you're reading a book and you stopped at the first 5 pages and you're like, okay, I got the whole book. Make sure you listen to everything we're about to cover, because what I just gave you was how to identify a potential bottom today. But what if that does not happen today? Then what? Then we shift into a little bit more day trading mode, and we're going to end up looking for stocks to be a short seller of if the market conditions continue to unfold in a bearish manner. So think about what we just did. 90 minutes before the market opens, we just mapped out what we plan to do in the first 2 hours of the trading day. What it needs to look like if we're going to be a buyer, what it needs to look like if we're going to look to short sell. So when the market opens, nothing will confuse us because we already planned what we anticipate happening, and we already have the map, this side or this side. Show me which one I'm supposed to do. We also have option expiration today too, which is going to throw a whole bunch of stuff in there as well. All right. So Christy, I don't know if you actually just joined the call. We actually just gave a whole breakdown of what's going on in the S&P. So we are expecting the S&P will hold support at that 200 period moving average. I'm not even sure if we're going to get down to that level today, but here's the big thing. What's the minimum criteria that we're going to be looking for to start dipping our toes back into the water as a swing trade? We covered this a couple of days ago, and I'm actually going to pull this back up on the chart. Remember, we've been walking you through if this, if that, right? That whole scenario. So if this is the daily chart and we are getting pummeled as we are right now, we're actually pushing down, right? What do we need to see to feel comfortable starting to bid into this? What do we need? Excuse me 1 second. I just got to get somebody out of the chat here. So what do we need to see? So whether it's Christy or anybody else on the call right now, what do we need to see to say, okay, smart money has stepped in? So what I just talked you through on the shorter time frame, that was the day trading time frame to identify if less selling is coming in. The other side of that equation is now we need to see more buying, which means that we start to print above 0 and plus 1,000 in the ticks. That's only the very first sign of it reversing. So what we would need to see, what I would need to see before I start to dip my toes in and feeling comfortable long, I would need to see a minimum of well bid on the daily charts. Now, you'd be like, yeah, that's great, right? Well, let's take a look. That actually happened recently and it didn't hold, which is going to bring my point up in a little bit more right here. So if you could visualize this, that would be the best case scenario for today and Monday right there. Okay, so I'm giving you the visualization of what to look at right there where we open lower, come back. We call that a bullish U-turn, and then we're looking for us to go well bid, which is higher highs and higher lows. So whether it's Christy or anybody else on here, right? What we are looking for are signs of life. We're looking for signs of bullish life to tell us that right now, buyers with a lot more money than us have stepped up, halted the selling or outweighed the selling by stopping it from going down, and paid higher prices from one day to the next. That's where you are acting like a pro because you're not guessing the bottom. You're waiting for it to stop skidding, and you're saying, okay, now, if you take that all the way back to what we just said at the beginning of the call about position sizing, because it's technically the first sign of a vicious reversal after a vicious move to the downside. If you were in my trading office, if you're in the boot camp with me, and we're talking about this every single day, what I'd be telling you is there's a lot of selling going on in the market right now. If I'm looking to build this position, I'm looking to get in there with a piece of my trade. I'm looking to get in there with size, and I'll just use round numbers. If I'm looking to get into 2,000 shares, I'll probably go in for 300 or 400 just to test the water, to probe, to see if that proof that we just got, which was a bullish U-turn into well-bid candlesticks. Again, I'll give you a visual of what we're looking for. And then, again, this is kind of cool, isn't it? We're actually, this is what we want to see before it happens. That's where you start to really think at a higher level and gain massive confidence. This is what we're looking for. Just so we're very clear, these two candles are what we're looking for after that. If that happens, then I will look to start building a position. But I need to see then the same thing happened on the weekly chart. So if we get it for 2 days, awesome. If we don't get it for 2 days and we keep going down, we're just going to sit back waiting and saying, okay, that's what I'm looking for. So that's how I'm looking at from both a day trading perspective and a swing trading perspective in the S&P 500 and when I will be looking to buy. And if that circumstance does not hold, I'll either be looking for short sales or I'll be in cash. That's how I'm going to be looking at those. So what I want to do now is I want to walk through pretty quickly right now some longer term trade ideas. We're obviously going to talk about Peloton and Netflix, which got absolutely hammered yesterday. We're going to pull those up quick, but as promised, I want to give you some ideas to look at today. So here's the Netflix. We talk about it all the time. Growth is the big thing in any of these companies, and it's the forecast of growth and where the expectation came from. If you're not familiar with where this is right now, it's all the way down here. So it's down $99 right now. It's down 20%. 20%. That is a gigantic number. So the obvious question that I'm getting from everybody here and messages everywhere, am I looking to buy Netflix today? Maybe as a day trade. If we see some order flow intraday, maybe as a day trade. Am I looking to swing trade the thing right now? No, I'm not. I'm still looking for exactly what I just showed you. I want to see proof. You should demand proof. I want to see proof that somebody with deep pockets stepped up and said, okay, I like it down here, and they start paying higher prices. More than one day. One day is short covering. More than one day, somebody stepping in and saying, okay, we like the valuation here based on future cash flows. So if I'm doing anything in Netflix today, it's probably just going to be day trading. Same thing with Peloton. Peloton is an amazing stock to day trade right now. But the news in Peloton was a little bit more dramatic. If you didn't happen to see the news yesterday or see the price action specifically, this was Peloton yesterday afternoon when this news got announced yesterday about halting production of its bikes. Now, I want to come back and talk about that just for a second. There was a video on CNBC a couple of days ago, I think on January 19th, about the CEOs and a couple of C-level executives selling stock in Peloton when it was over $100 at the height of the pandemic last year. Look, is there anything wrong with that? No. I mean, come on. We're in a pandemic. The stock is at the highest levels it's ever been. You can't sell them without scheduling them. So everybody knew about it well in advance. Let's not make that out to be like they did something they shouldn't have. Now, whether or not the company's going to recover, that's a whole different story. But hopefully today I've mapped out for you exactly what I would be needing to look at. Now, the Peloton story is a little bit different than the Netflix story. The Netflix story, I am looking for signs of life to be a buyer. Peloton, I'm not. Peloton for me is just going to be a day trading activity right now, if not maybe even a short sale, because this is a tough story to come back from. There's something dramatically has to change right now. All right. So what I want to do now is I want to go through some stocks. I have a list of a few stocks that are showing relative strength to the market over the last month and the last week. And these could be some stocks that you can consider looking to buy today. Again, this is not bottom fishing because these stocks are showing relative strength to the market selling off. There's a big difference. They're already showing buying pressure and not going down while the market is. So there's buyers underneath this. We call holding the bid. You want to learn that terminology, holding the bid in these stocks. So we're going to go over those stocks right now. First, I actually want to start out with one that's been pretty obvious recently, which is Merck. Maybe not the sexiest stock in the world, but if you can take a quick visualization of what Merck is doing compared to what the market's doing, Merck is going sideways while the market's getting absolutely pounded. So Merck is definitely in my list of ideas for today. DWAC, I know we've had some conversations about this. This can be a pretty volatile stock. It's a SPAC. In the short term, if you can handle the volatility, we're actually going to be looking at this inside candle to break out the same way that it did over here. A little bit more volatility. LVS, not much order flow, but again, you've been watching the story of the changes in Macau, which have held these stocks up pretty good. So LVS is going to be in the list. FUTU is another one showing some relative strength. You can see, again, visualize the market going down here. This stock is slowly starting to show order flow during January, pulling back a little bit right now, working our way over into energy stocks. You can see very, very nice push to the upside in PXD. Chevron, and ExxonMobil as well, showing some good relative strength. Want to work our way over into metals and miners, which we've been talking about. Newmont and AEM as well. Not so much here, but you can tell that. Let's actually go over to GLD and the SLV. Both of these are spiking with the bad news. Probably got a little bit of resistance here. But actually, what we're looking for now is Newmont is trading a little bit better, but AEM I have on my radar right now as well. We got to get out of this range right now. I'm surprised that it pulled back with the rest of the market yesterday. So just want to go over a few more for everybody. PG has shown some good relative strength recently. VMW as well. Let me just make sure. I want to give you enough ideas in different price ranges. That would be kind of cool. Sticking with energy stocks, COP, Chevron, we already covered. One that's actually kind of creeping up that we talked about a little bit recently is BEKE. Finally broke out of this range. Now, I'm not doing anything here yet. I'm looking for this. I'm looking for a push and a pause above this 23 level, and then I'm going to keep an eye on that. Two stocks you probably have not paid attention to, but probably should. Philip Morris and Altria. Both of them showing really good bullish order flow since the bottom of June. You can see that they're, bottom of January, December. Some resistance here, but they are showing some good bullish order flow. And Pepsi as well. Let's see, Shambu saying SLB, Schlumberger. All right, let's take a look at that one too. SLB. Yeah, good call. Absolutely good call. Christopher saying, I agreed on Peloton's exact wing, but they did. You're right up. Yeah, that's true too. That's true too. All right. So hopefully we gave everybody a bunch of ideas. What I strongly recommend doing, we posted, and I'll post it in the description again below. We have a hedging your portfolio video that we did recently. I put it in the chat. I'll post it below the video if you happen to be watching this later. If you're new to trading, we spent a lot of time today building scenarios of identifying a potential bottom before it happens, how to trade it if it happens, and how to adapt if it doesn't happen. That's the kind of trading you want to get to, because if you're sitting right now and the market's confusing you, if the market's overwhelming you, what I want to challenge you to do, just go one little step higher. And actually, Min just brought something up that's pretty important. SLB earnings. Thank you, Min. Challenge yourself to say, here's what's going on in the market. Here's what I think is going to happen next. Now, here's where I want to leave you and leave the week with this, because it's kind of important. Let's say you do that for 4 stocks. I'll just use 4 as an example, right? So whatever stocks you happen to be trading, you say, okay, I think Amazon's going to do this. I think Apple's going to do this. I think Schlumberger is going to do this. And I think XYZ stocks are going to do that, right? You map out exactly where you think that stock's going to go this week. Let's not even say today, this week, right? XYZ, Morgan. Oh, by the way, Morgan Stanley and Citigroup. Keep an eye on those guys today as well. Morgan Stanley had a really good day yesterday after earnings. I'm going to tell you what's going to happen. If you're understanding everything we're talking about, if you're understanding how to understand order flow and read the tape, and you put those pieces together, one of those stocks is going to do at least one of them is going to do exactly what you thought. Don't focus on the 3 that didn't. Focus on the one that did, and you'll be shocked at how much you actually know, but you just need to trust yourself to do it. I'm going to leave you with that. If you find this stuff valuable, please do me a favor. Smash that like button, hit subscribe. We got a new video coming out this weekend. And remember what we said about share size today. We're going to have a lot of volatility. So be safe out there today. Have an awesome weekend. And I want you to know how much I appreciate watching. Take care now, everybody. Thank you so much.